Gautam, thanks so much for joining us this morning. Always great to have you on ET Now. We've been talking a little bit about the reboot that's being seen in the retail industry. I wanted to get a perspective from you in terms of where we're at in the recovery. Are you seeing demand picking up, where we're at in the upcycle, and really what some of the trends are on ground?
So I think if you look at different sectors, the recovery is different. If you look at the FMCG sector, the FMCG I think is already 100%. Real estate is doing well, auto is doing well. I think fashion apparel is getting there. I think March will be a watershed month to 100% recovery, I hope. Things are getting better. The country is getting vaccinated, and as the country is getting vaccinated, more people are stepping out. I think 20 million plus people are now vaccinated. So I think we're on the right trajectory, and I am cautiously optimistic, like I say.
Okay, so in the right direction. Let's also talk about, in terms of the kind of choices when we're looking at the Indian market, whether it be food to clothing to tech, what are the kind of consumer trends that are emerging now post the worst of the pandemic?
So at least I think in retail, whilst a lot of stuff went online, and in the pandemic, everything was online. But I think that reversal is taking place. We've seen this weekend sales to pre-COVID level. So I think weekends are back to pre-COVID levels. That only indicates to me that consumers are willing to come out and spend. I think people are investing in a better living. That's why you're seeing better sales in real estate, not only in the big cities, etc., but I think suburbs or outhouses, farmhouses, where people have a little bit of space, I think that is becoming sought after. So I think that is a reversal in trend. I think a lot of people are still working on Zoom, like we are working on Zoom just now. So it really doesn't matter where you live. So that I think is a great change that will take time to come back to physical meeting. But I would say I am now 75% back to physical meetings. I don't prefer the Zoom meetings. I would have actually done this in person. It would have been better. But that's what I see.
Okay. What about the demand in Tier 2, Tier 3 towns? What's that looking like? Is there reason to expand further into those segments?
So you're right. I mean, I think because the Tier 2, Tier 3 got less impacted, the bounce back in those cities is far higher. Having said that, Raymond has always believed in market penetration, and not only Tier 2, Tier 3, but we go all the way down to Tier 10. So we are present in towns that have 50,000 people, and that strategy has worked for us. We've focused. We've got a distribution network that goes to over 500 towns, and I think we continue to believe in that.
Okay, now cotton has gained over 13%, since the beginning of the year. Talk to us a little bit about the raw material trends, the kind of impact this is having on margins as well.
So I think, it's difficult to predict raw material pricing. I think, there's a pent-up demand, and that is driving the prices up in the short term. Whether you see cotton or whether you see steel, I mean, it's across the board, the similar trends, and I think it will be cyclical. So you'll see the ups and the downs. In a branded apparel business, raw material is a lower percentage of your final selling price. So whilst raw material pricing will impact you a little bit, it's not going to be a great deal because you're not a commodity supplier.
Okay, fuel prices have also gone up, so let's talk about that. And quite continuously in shipping as well, we've seen there's a shortage of containers. So how are some of these factors impacting logistics, and in turn, of course, how much has cost gone up because of this?
So yeah, you are seeing input costs going up, whether it's fuel prices going up or shortage of containers. I think this is you taking it in your stride, whilst I think the shortage is there, and it's there for various reasons. You will see it ease out. It's not going to be shortage forever, because as the prices go up, the demand will come down. And you have to live with this, I guess.
Okay, now there has been an anti-China wave, of course, in the US. Brands have been looking for alternates to sourcing from China. There's been a lot of discussion as to whether or not things will shift towards India as a preferred destination. Are you seeing any inquiries or any interest on the back of that?
Certainly, I think US customers have realized that they don't want to be in China. And that is, of course, helping us. If you see the auto component business, we're getting more orders. I think fashion apparel is still taking time to open up, but I am pretty confident that the US customers would look as an alternative to China. It's really a question of how well we position ourselves to take advantage of this current sentiment.
And Mr. Singhania, tell us how the export business has been shaping up and what kind of a recovery as well you've seen in your retail business.
Export, like I said, in different businesses is different. I think in the auto component business, it's picked up far better. In the engineering, it's picked up far better. In the apparel business, it's still slow because retail has still got a lot of stock in the US. So I guess maybe a couple of quarters is my guess, and we should be back to normal.
Okay, and let's also talk about the demand for real estate. Have you seen an uptick after the duty cuts have been announced by the government, and are you also now moving towards some of the new launches? What's in the pipeline?
So yes, I think the stamp duty reduction has been a big boom. But like I said, I think fundamental change is that people want to get their own home. And Raymond is in the affordable luxury segment. Small homes with a lot of amenities. I think that is really doing well for us. I think today we are the #1 project in Thana. We are outstripping sales to all the competition. And that's really a factor of, the right product, right price, right location, right amenities, the trust of the brand, etc. So I continue to see the demand for our real estate to be strong. It has become the most preferred product in Thana, and for people who've not seen it, please come and see it. You will really see what the Raymond brand stands for. New launches, yes, we have a few things in the pipeline. Currently, we have a 1 BHK and a 2 BHK small, having a nest, and we are looking at other products to cater to the demand of that market.
What about the demand that you're seeing in auto parts as well as the engineering division? Are you sensing some sort of a sharp uptick after we have seen things gradually opening up and things getting back to normal?
So I would say those businesses are back to pre-COVID level. Auto globally and internationally and domestically, as you are aware, are doing very well. So we continue to remain and have strong order books on that business. And I certainly see that continue at least for the next few quarters.
Okay, what's your outlook then, Gautam, for FY22 growth plans, with respect to the kind of top line and, of course, bottom line that you're looking at going forward?
So I think, if we achieve 2019 levels, we would have done well. I still stay cautiously optimistic. But on a balanced scorecard, I think we have recovered reasonably well. Can we do better? Of course, you can always do better. But I think we have to slowly wait and watch and be, like I say, cautiously optimistic.